I just want to take a second just to talk about the Howard Group. A number of you have heard about us, but you may not understand a lot about us yet. First off, we were 26 years old last month, so we've been around for a while, and I can tell when I look back on past conferences at the hairline and how gray it was, or is now. So while we started in 1988 as a firm providing traditional investor relations services, now you will not find the term IR on our website. We have a package of services that essentially have been sharpened by street experience. We provide a host of advisory services, invested a lot of our own money, and played a central role in raising a significant amount of money for our clients over the years. Yes, we do place a lot of importance on communication, messaging, marketing, and relationship building, but we look at all the components of any business that ultimately lead to it becoming a successful public business, and the people in this room know what that means. And that includes what may be missing in the business story. Our clients are businesses, not stocks. We promote their business and the potential to a variety of audiences and build the relationships over the course of time. As you know, the market often values a micro or a small cap company on what could be in addition to what has been accomplished. Our job is to deliver the audience and nurture relationships. It's the client's job to deliver the business and meet goals and objectives. One thing we're very proud of is the fact that the vast majority of our client relationships last for many years. We have one client right now we've had for 9 years and made our first investment 9 years ago. And others have been with us 3, 4, 5, 6, and 7 years. I think another thing that sets us apart is that a combination of the Howard Group, its employees, or the Insight Limited Partnership 2, which is associated with the Howard Group, those groups are invested in every one of the presenting companies today that are currently publicly listed. Our philosophy is simple. If we don't have comfort with management, the business, the company's potential, and the risk-reward balance, we have no interest in solidifying a relationship. We pursue investments, we don't chase fees. And as a side note, and this is a plug, because we're just going to be coming to terms shortly on our Insight LP2, we will be launching funding for LP3 early in 2015. We look at our clients as a portfolio. What is in that portfolio reflects on the Howard Group and the entire client group, and thus the need to strive for quality, balance, and diversification. On the screen is a bar chart that represents the collective performance of the Howard Group portfolio. It's calculated on a theoretical $1,000 investment in each client as of January 2012. It's now worth 55% more as of the end of October, and as you can see, it was above 90% earlier this year. So that's a few years, but consider that most of our clients are or started on the TSX Venture Exchange. Let's bring up the TSX index for the last 3 years. We were up 55%. The TSXV went the other way, and over the past 3 years is down 54%. Granted, the Venture Exchange is burdened with over 1,400 junior resource companies, many of which are orphaned now, but I believe there's more at play here. And that's now we've got the 4-year chart. That's only down 68%. Let's go back to pre-2008. So the 7-year index chart, as of last week, the TSX Venture was down 77%. So there isn't time to get in all aspects of the junior market or debates about the availability of public venture capital, but I do believe there are many factors that have contributed to the incredible drop in the TSX Venture Index. A key one, in my view, is the exceptionally long time it takes to deliver the essential elements to create the real shareholder value. Another major factor is that the wins have been infrequent, the losses are becoming the norm, and that leads to a lack of capital for redeployment. As a result, those who still participate in the junior market have become a lot more skeptical and certainly frustrated. Expectation is what creates perceived value in an emerging company. Anticipation is a great aphrodisiac. It's tough leading a public company. You not only have to build an attractive business, you have to understand the business of being public, And that includes creating a story that draws people to your company while balancing expectations with reality, being inspirational but not overzealous. Simply put, people buy emerging companies for rapid growth, not stagnation. Last week I was speaking with an investment advisor I've known for many years, and he focuses solely on micro and small caps, but he has a superb list of wins and a lot of happy clients. He has a disciplined review process, and his attitude is about 2% of all publicly listed micro small cap companies become successful public businesses. I am sort of in the same camp that not a lot of them make it. A big part of it is diversity, and that's going to be evidenced tonight through the 7 presenting CEOs that you will hear from. You're going to hear from a manufacturer of a unique mass transit vehicle, a cellular concrete company, a chemical technology company, agricultural seeding technology, solar panel quality measurement technology, advanced alloys technologies, and a pre-RTO resource company. A term you'll hear several times tonight is disruptive, and it is one we do not use loosely. The market caps on the companies tonight are between $9 and $85 million.